Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for March the 29th, 2011. Now to get started tonight, we're going to be looking at the exchange traded fund, the iShares MSCI Japan IDX-EWJ. Now with this one here, we can see what's happened during this. This is the aftermath of the earthquake in Japan, of course, and now what we're doing is looking for a recovery back towards this 11.50 $12 range. I believe there's a lot of very good companies in this EWJ, and in my respectful opinion, we should be looking at potentially getting in on a buy position. And if we can pick up $1.50 a share on this particular ETF, it's a very good, potentially a very good trade. So we know right now we can see our Vantage Point 18-day predicted moving average coming in at 1061. That is a major resistance point for us, but I think we're going to be able to take that out in the weeks ahead. Now, looking at the predicted MACD, we're running flat in oversold territory. The same thing with the predicted true strength indicator. However, it has crossed the trigger. Our predicted medium-term difference is higher. Our predicted short-term and long-term difference is somewhat negative. Now, looking at our crossovers from Vantage Point, we're going to go basically one at a time, looking for these signals, but more or less we're going to be actually trading off the more or less the daily report. Now our short term is pointing lower. Our medium term is still pointing higher. Now that's what I find interesting. Our medium term crossover is pointing higher. We've corrected a little bit today. Now our long term is still pointing down, but you can see that we're getting stronger. So with that said, let's go into the daily report here and see if we can start building our positions. My opinion is we should be building positions on this particular ETF even down into the 950 980 area. I think is a very a reasonable area to get into this particular trade. So for tomorrow, we have the neural index is down for the fifth straight day, 1026 1038. This is obviously not a big mover, the EWJ, but it is, in my opinion, going to be in the weeks and months ahead. So we're starting to build our positions, get into positions early for what I think will be a move back up over the $11 a share mark, which again, if we can get up to 1120 1150 per share on this particular ETF, that's a very nice return. That's the way we want to look at this. If we can pick up 10 12 13% off an individual trade over the next coming days, weeks, and months, then those are the kind of positions we definitely look for. Because again, if we look at this pre-earthquake, pre-Japan earthquake, and again, we know that that's going to likely in the rebuilding process, it's going to move higher, but we can see that it was moving along very nicely up in the 1150 1180 range. So again, that's what we're looking for this particular exchange traded fund to move back to. Now that's our first position for tomorrow. Now our second trade for today is going to be in the US-Japan currency pair. This one is still volatile, but we have a nice looking signal progressing here. Now what we have is we have our predicted short and medium term differences are breaking higher. Our predicted long term differences beginning to break higher. Now the key signal here is we're looking for a number of confirmation indicators. This particular setup is usually a top producer. The predicted MACD, the predicted true strength indicator, and the predicted medium term crossover all pointing in the same direction with plenty of room to extend to the top side. Now the only thing that concerns me is another earthquake in Japan, some sort of global problem here. This could send the dollar yen lower very quickly. Now before that happens, I think we are going to extend towards the 8250 8260 area. That would be the target area. So again, looking at this, the signal is actually very clean, barring any disastrous nuclear incident happening in Japan again. So if you're trading this, you obviously have to be brave, but you very clearly want to be on the buy side. So we've identified a nice clean signal. Now what I want to do is look at our major support and resistance areas. Now the way to do that is to bring the triple EMA across and look up and then look at the major levels of support or resistance in comparison to where the market's closed. We've closed at 8170. We have our 3-day at 8136, our 8-day at 8112, and 81.35 on the 18-day, which is a critical level of support. So that is going to be the focal point of our entry. We want to see the market stay above 81.35 in order to get this thing moving. So from there, we're looking for the vantage point predicted high and predicted low to be consistent with that at least the 18-day predicted moving average when we're trying to fine tune this entry point. Now what we're going to do is bring this down. You can see we have 81.22, so we're going to use 81.35 as our entry point. And your aggressive traders, you can get in a little earlier towards maybe even the 81.40, but again, you're going to expect volatility. Stops in this trade, we want the stops on this trade below the 80.40 level to stay out of that current 80.60 82.50 range. That's pretty much the range we're dealing with right now, but we can see that our short-term, medium, and long-term predicted differences are all turning over positive. So if this thing can gain a little bit of momentum here, we could easily break through that 82.50, and that could open the door to 83, 84, possibly even higher in the months ahead. That's my anticipation. So good looking trade there. Just be careful of those equities and commodity markets. Keep a close eye on the US dollar index to see what's going on with that. But for now, I think we should at least see the dollar yen test the 82.50 level again. So those are the market positions for March the 29th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.